Good afternoon. My name is Eric Levinson with Vena Capital, and today we have the first Vietnam Opportunity Fund webinar of 2025. We're joined today by our Chief Economist, Michael Kokolari, our Chief Investment Officer, Alex Hambley, and Portfolio Manager, Con Vu. In today's webinar, which should be around 40-45 minutes, we're going to cover a brief recap of the economy for 2024 with an outlook for 2025, and importantly, go through a performance for the Vietnam Opportunity Fund in 2024 with an outlook for 2025. If you're interested in a longer kind of view on the economy, we had our firm webinar last week where Michael and Lin, our head of research, go through the economy at length. So today we'll ask for kind of our shorter comments. We'll spend more time on VOF. So with that, Michael, kind of spend 8 to 10 minutes on the economy 2024 and your outlook for 2025.
Yeah, thanks, Eric. So the key points as relates to the investment activities of the firm, including VOF, is that last year, 2024, Vietnam's economy grew by over 7%, which is a huge number, obviously. Most of that growth was driven by exports to the U.S., and particularly exports of high-tech products to the U.S. that grew almost 40%. Now that's fabulous, and I mentioned it, we had a really good GDP growth figure last year. But actually, when you think it through a little bit, most of the economic value of all that surge in exports actually gets captured by the FDI firms that are the ones that made the products. Now, don't get me wrong. Again, it's good for the overall economy. Wages, factory wages were up over 10% last year. The workers, spend the money into the economy. That benefits the type of companies that we're invested in, which is all good. But this year, what we expect is a transition from this export-driven growth last year to more domestic-driven growth this year. Part of that is just because the surge in exports, you can't replicate that every year. You think about it as sort of a spring that dampens over time. So it has nothing to do with Trump or tariffs or any of that kind of stuff, and I come back to that in a second. It's just a kind of normalization of our export growth. And this year, 2025, what we're expecting, we already see some signs of this, that things are going in this direction, is domestic-driven factors are going to support the economy. That's actually, from an investment point of view, very good, because I just mentioned that when you have the surge in exports, it's the FDI companies that capture the value, whereas now the types of companies that we're invested in capture the value. And specifically, what I'm expecting, and again, you already see signs of all this kind of lining up, is a surge in infrastructure spending, a lot more real estate development activity. I think by the end of this year, by the end of 2025, we're going to have a very buoyant real estate market. I'll tell you why in a second. And those two will ultimately feed into faster consumption growth. Last year, 2024, consumption was kind of started the year fairly weak, and it got a little bit better as the year progressed. But in the end, it was a bit weak because things were really driven by exports. There's actually an article about that in the newspaper today talking about this idea. The good thing is that the acceleration in consumer sentiment was sort of happening all year long. And what we expect for this year is as real estate activity picks up, real estate development, there's a wealth effect from that. That's going to make people feel more confident, going to make them feel happier to spend money. The specific scenario that I have in mind is that, so I mentioned export will probably slow down. I think the slowdown will happen in Q1 and Q2. And in response to that slowdown, we'll probably see the government come out and take actions to really stimulate the economy, to make the real estate approval process much faster, the zoning and approvals to get projects going. And then again, that will ultimately feed into better consumer confidence. So that's kind of a big picture of how I see things. And the key message is that it's really a great setup for the types of companies that we're invested in, that have exposure to these sectors, the domestic market, real estate, et cetera. So.
You touched in there, given the events of yesterday, inauguration, the Trump.
Right. So I think that we actually published some reports right at the time of the election, and we were talking about this idea that I can't remember how we ended up wording the headline, but basically that Trump really probably wouldn't be much of a threat to Vietnam. And I think the way that things are going, that we always took this view that he's coming out and saying these very big tariff numbers, but at the end of the day, this is just a negotiating strategy. You know, he's a Manhattan real estate wheeler dealer type guy. So that was the mindset that we had when I published these reports. And then actually what we did is we delve really into very detail about, there was one of his advisors in particular, his name is Stephen Mirren. He's a Harvard PhD, and he's going to be a key guy in the administration. At the time of the election, he published a very detailed technical report. You can find a two-page summary that we wrote on our website about that. And the summary of that was that it was very clear at that time that the tariffs would be a negotiating strategy to try to get down the value of the dollar. So we never really thought that Vietnam would be targeted by Trump, and now it's becoming more clear to me that Vietnam will actually benefit from Trump 2.0. Maybe not as much as it did under Trump 1.0, but this is going to be something that actually helps to benefit the economy, and more FDI flows coming here, producing exports to sell to the U.S. And so it's going to be another good 4 years from Trump for Vietnam, I believe.
Okay.
I think your headline was Trump risk is overstated. I think, which was a
well, I wanted to say there's no Trump risk, but my coworkers kind of talked me down to something more moderate, and because my real belief is that there is no Trump risk, and now I think the situation is even better than that. I think we're actually going to do well out of Trump 2.0 for Vietnam. Yeah.
Okay. Thanks. So with that being said, let's talk more about the portfolio now. So, Con. 2024, Michael talked about the economy really driven by exports. How did that impact the portfolio? How did the portfolio do? And importantly, why?
Yeah, so thank you. Happy New Year, and Happy New Year to our viewers as well. So last year, in 2024, the fund closed the year, 31 December, with $1.1 billion under management. NAV return on a total return basis for the year was just over 10%. The share price increased only about 3% for the year, and that meant that we ended the year at a discount level slightly wider than we were at the start of the year at 23%. And we can delve into some of those points later on. But with regards to the portfolio performance, to Mike's point, what we have seen is this gradual recovery in the consumer sector, and that's where a lot of the portfolio activity has been directed towards, initiating positions in consumer companies. And again, we'll cover that as we look at the portfolio activity. What's contributed to our portfolio performance last year really can be broken down into sort of four key themes, one of which is around the technology theme. So one of the companies in Vietnam that represents that technology play is FPT. FPT is the largest software outsourcing company in the country. We've been a long-term holder of this company well before this AI trend and the semiconductor interest. We believe that at the core, this company has a very interesting proposition of developing and exporting, so to speak, software sources, outsourcing to companies around the world. And so last year, we saw FPT increase around about 85% in terms of share price performance. And they're one of the biggest big contributors to the portfolio. However, what is really interesting is that the largest contributor to the portfolio performance last year was around an industrial company, specifically the monopoly airport operator, ACV. And why is that? So if you think about that FDI interest that continues, what we also saw was tourism improve, both domestic and importantly, international tourism. And ACV is one of those companies that very much take advantage of that flows. They are a monopoly operator. They operate something like 23 airports across the country. So last year, their performance, share price increased 90%. And because of the weight in the portfolio, they're the number 4 holding in the portfolio, was actually the largest contributor to our performance.
Yeah, I mentioned that last year was like a big year for exports. Actually, technically speaking, tourism is an export. So the tourists, were up to 40% last year. So that helps to contribute to the.
Can I stop you a little bit on ACV, because when we were talking in November, when we were talking about the strategy of the fund and how that plays to the long-term growth in Vietnam, and we talked about ACV being a good example of what the fund does in terms of how we actually originally got access to that company and how we've grown that company up until the point where it's listed, and now we have a significant stake, and now it's doing well. I think maybe just a little bit of background to how we got into that company and how that represents what we're trying to do in the fund.
So if you think about Vietnam, 40 years ago, command economy, right? I think 20 years ago when we started this business, this fund, there was something like 15,000 state-owned companies. Today, a lot less, say around 2,000. During that time, there is this process of privatization. And this is what ACV represents, a privatization opportunity that we were able to participate back in 2017. Now, I remember when we tried to meet with management, they were very reluctant, right, to come meet with investors, let alone foreign investors. The offering document was something like 4 pages written in Vietnamese, right? Fortunately, the market has moved on well ahead since then. It's become a lot more institutionalized. But the point being is that we were on the ground. We had investments at that point in time in another player in the industry, Vietjet. They had just gone to IPO, and again, a reflection of that strategy, taking advantage of companies pre-IPO, taking them to IPO. And we were able to sort of channel check some of the things around that ecosystem. You know, you've got on one hand the airline operator, you've got now an airport operator. And because of that, we're able to form a view of where the opportunity was. Yeah. So the last two components of that performance, the contribution to performance, very much comes back to Mike's point earlier, the core economy. Interestingly, Cang Dien Homes, which is the third largest holding in the portfolio, they're a landed property developer. They bucked the trend, right? The real estate sector still is trying to recover from that bond crisis in 2022. Cang Dien Homes, however, given its position, the product that's offering, the ability for it to complete licensing and deliver a very high quality product to consumers, they actually did very well. And last year we saw the share price increase almost 30%. They're the third largest portfolio holding in the portfolio and one of the big contributors. And the final contributor, not to be left out, is the largest holding in the portfolio, which is ACB. And ACB, if you recall, we've spoke about in the past, leading commercial bank. We were able to participate in this company through 2 large tranches, so we're not sort of buying into the market, but identifying opportunities where we can pick up strategic blocks through other investors. That bank increased to 29% last year, and given its number 1 position in the portfolio, the third largest contributor. Importantly, the sector itself has been resilient. We believe that into 2025, given its 40% weight to the index, given the earnings growth, the names in our portfolio and the names that we're looking at in this portfolio will add and contribute to performance.
And I think this is another good example of how the fund works within the Vina Capital platform. And Mike, you've just done a report on the banking. You've done do you want to talk a little bit about that?
So
and then KB
actually, I will talk about the banks, but actually what you just said kind of links back to something I mentioned in my introductory remarks about the real estate sector. Because actually one of the things that's going on in the banks, which we saw because we really dive deep into all the internal earnings and all this kind of stuff, is that the banks, many of them had previously very aggressively written down some loans that were backed by real estate collateral, and now what we see is they're starting to write back some of their income. Now that's not the only story for ACB, but that's one of the growth drivers for the sector next year. And so that was, what I mentioned in I give sort of briefly at the beginning to say we see signs of the real estate market picking up, and that's one of the signs. So that, the two are very locked. Every country, they're always locked together,
So bringing back to the portfolio, so we talked about what contributed to the performance in 2024. What, if there were, what detracted within the portfolio as well?
Yeah, so on the very point of real estate, we've updated investors last year, the last update in November, around some of the write-downs to the portfolio. Now, let's put that into context, right? That these write-downs we're talking about represent less than 8% of NAV. And within that, you can see that real estate, several real estate holdings were involved in that. Now, we're beginning to see signs of this recovery. I can only imagine that that's going to translate to the share price performance and, importantly, the ability for real estate developers to launch projects because they're getting the approvals, for banks to lend to those projects because they're bankable now, they've got the licensing, and therefore the consumer is going to buy that. And so I think we've talked about this real estate recovery post the bond crisis. we're beginning to see real, genuine green shoots come through.
Yeah, the real estate market, I mean, in every country I've worked in over all those years, the real estate market always has a kind of similar sort of J-curve type behavior. You know, you get the last little voomp, you know, and that's when you're doing the write-offs and whatnot, and that's just before things really start taking off.
Can I jump in with a point here? So again, one of the themes we've talked about with VOF and its strategy and its approach is that it takes a private equity approach to making its investments. And obviously the bond crisis affected us, and we got caught in it with our real estate exposures. But I think there's a very important point around that. Yes, it is a small part of the fund, but a lot of those exposures have some downside protection built into them, such that even though we did get hit, the impact on us is perhaps not as bad as it might have been if we had a pure equity approach. Yeah. I don't know if you want to talk a little bit about how some of those, and how we're seeing those downside protections helping us as we recover capital and perhaps even get an uplift in.
Yeah, so on the Norfolk or Novaland example specifically, you know, we have actually recovered 50% of our investment costs. Right now, had we held the stock, right, this thing would have declined 90+%, right? And then we would have had to wait for the stock to recover, or we probably would have been selling down as we were, as we saw that decline. Because of the downside protections, the key is that we're able to get back to the table. We're able to get back to the table and negotiate. And because of that, with regards to Norfolk, you know, we are looking at a package of assets. We're looking at a package of collateral and mortgages that will effectively secure that repayment schedule that we expect from them. Now, this is going to be protracted, and I think that we have to put into context. But the point is that we're beginning to see some movement in that. In other investments we have, where we have similar restructurings, we actually are beginning to see liquidity, and they're beginning to give us cash as part of that commitment to repay. So on the real estate sector, with those downside protections have allowed us to have recover some of the investment costs, but also have an expected cash flow. Now, on the other side of the detractors to performance has been around the consumer sector. And this is to Mike's point earlier, is that we saw, you know, relatively weak consumer sentiment last year. I think there's a correlation with the real estate sector there. However, in 2025, several factors we expect to improve that sentiment. So last year, you know, in holdings and specifically the convention and F&B business were impacted. We saw a general decline in consumer spending, going outdoors, into restaurants and eating out. Consumers in Vietnam are very attuned, and I think the volatilities of last year meant they just wanted to hold back a bit of spending, right? And then on the healthcare sector, on TCI, Tulkup, again, we saw post-COVID that decline in corporate health checkups and out of patients. Importantly, the second half and importantly into the third quarter, we've seen improvements there. We've seen a significant improvement in corporate checkups. And I think that plays into the FDI and export story as factories, you know, come to Vietnam and workers return to the factories. We're seeing Tulkup explore technology using AI. We hear this a lot, but you know, because we've been able to, you know, we have a material stake in the company, connect them to other parts of and portfolio companies that we invest in, we're beginning to explore some of these initiatives with them. And then finally, similar to what we did in the South here, in the healthcare platform with Tum Tree, where over the past 2 years we've been focusing a lot of the efforts on building out, bolting on, rolling up. I think there's a real interesting opportunity to use a very strong brand like Tulkup in a position that they have in the capital city to perhaps explore expansion and roll out. So that's sort of where we're looking at for this year.
All right, thank you, KB. And so let's move towards Alex. So Alex, you've been kind of a member of the VOF team on the investment committee for over 5 years. You joined the firm as CIO officially a little bit more than 6 months ago. How is your role shaping the VOF team, because your purview is different than what Andy was doing?
Yeah, so thank you. My role is CIO of the group, but I also have the VOF team reports to me.
Yep.
And I spend a little over 50% of my time with the VOF team. What being the group CIO allows me to do is get a very good feel for what's going on across the economy. And I remain, after my 6 months here, very positive about the long-term prospects for Vietnam. Having the VOF team reporting into me gives me the opportunity to have a really good look at what the fund is doing, how it's positioned, how it's executing on its strategy. And I remain of the view that I think it is a very good way for investors to play that long-term story in Vietnam, given the fund's ability to invest across the risk and liquidity spectrum. So we can do, as KV has been talking about, we've had a lot of success with our investments in the public market, but historically we have a very good private equity track record. I think I've talked about this before, 60 private equity investments, of which we've liquidated 50 of those, which I suspect is probably the leading private equity track record in the country. And a team who have good experience in building, it's a stable team and they have good experience across that track record. So I think VOF is well positioned to take advantage of Vietnam, but very importantly, my role across the group platform gives me great confidence that I think VOF is being managed by the right platform within the country. Right. So that gives me a lot of confidence that the things that KV is trying to do is well supported by the group and benefiting from some of the macro features that Mike's talking to.
Thank you, Alex. And so one of the things that Michael talked about, and this could go maybe to you and then Con, is this: the economy is going through a little bit of a shift from 2024 really being driven by exports, FDI, kind of trade to the U.S. 2025 driven more by domestic demand, consumers. Historically, we've talked about the Vietnam Opportunity Fund as kind of having this Berkshire Hathaway type approach, investing in large corporations with management teams we trust, helping them build businesses, which tends to be kind of very long-term, low turnover. As we think about how the economy is pivoting in 24-25, does that change the way we manage the fund? Is it positioned, does the fund need to pivot? Or is it positioned to appropriately?
I'm going to leave the fund bit to KV,
okay,
but I'll give you a CIO perspective on this, which is, and Mike and the CIO group that are sort of thinking about how Vina Capital positions itself for this, clearly we are concerned about some of these short-term factors. The currency, we haven't talked about the currency yet, but you know that's a factor. But where I sit, I think this is going to be an opportunity for us. The fund is not trading, but if the stock market were to dip and we were to see value opportunities, we need to be nimble and fast enough to take advantage of those to then play to that long-term view. So where we have a long-term view of a particular company, we have to wait for the value opportunity. My guess is going to be that over, and Mike, you and I talk about this a lot, over the next quarter, there are going to be quite a few of these opportunities, and maybe you can talk about that a little bit more. But going to KV now, the fund should be, in my opinion, positioning itself to take advantage of those, whether that be on the stock market or whether we see that in the private market.
And absolutely. If you think about our strategy, you hear us talk about this idea that our focus is around sectors and therefore companies that are benefiting from Vietnam's rapidly growing domestic economy, right? And with a country of 100 million people, 65% under 35 years of age, rising middle class, those are the overarching themes that allow us to look into opportunities.
So the pivot actually drives more towards where you already are.
Yeah, and I think that what we're seeing is that consumer sectors, the Vietnamese consumer have enjoyed a tremendous amount of choices and value in recent years, right? I mean, as the middle income rises, we're seeing the Vietnamese consumers. Now, that hasn't translated necessarily to Vietnamese companies benefiting from that. A lot of regional players have come to the market and set up, operations and distribution and retail here. We're beginning now to see very strong Vietnamese local brands, local companies beginning to rise up.
Well, let's talk about, so earlier, you talked about the four largest contributors. One company that may have been number 5 or 6 is Mobile World. So that's a local company in the consumer space that is a leading local company. So maybe spend a minute on them and how they fit into your portfolio themes.
So with Mobile World, I have to admit that we've spent several years looking at what their business model was going to become. Yeah. They started off as a mobile phone retailer, right? And which is interesting, but you know, so the cycles and technology, it wasn't what we felt was a long-term or durable business model. What was really interesting was they started to look into opening retail convenience stores and supermarkets. And as we observed them go through that, first year, second year, third year, fourth year, we became to get more confident in their ability to actually create a profitable business model, and that they were able to take competition. Okay, so Mobile World, we actually initiated a position in them in the portfolio during the year. This is a $3.5 billion US dollar company. They have, you know, over 300 stores across the country, and with that technology that they built up in supply chain and distribution, they're able to translate that into consumer goods, into perishable goods, and therefore, you know, you can see this sort of combination is coming together of what is a very, you know, good operator with technology, with now a product that actually makes sense and is relevant to the consumer. We initiated that. I suspect that you'll see it pop up into the top 10, maybe top 5 position in the portfolio over the years. Another company that we initiated into the consumer sector last year was Kiddo Group. And Kiddo Group has been a long-term investment in the fund. In fact, our very first investment. I mean, Alex, in your previous role, you also were invested into this many years ago. And you know, it's a company that has a management that's been able to demonstrate that they can execute on the strategy, grow their business, and do the right thing for the shareholders. And so we, again, identified an opportunity in a private company. They were a steam bun producer in the country. If you go to the dim sum, you'll see the bows there. They have 10,000 points of sales, this family-owned company, and they were looking to exit. And so we said, look, we're a financial investor. KDC is a great manufacturer and operator. We partnered with them, acquired the control of this business, and now we're going through the process of, you know, institutionalizing it, growing it, and expanding it. So those are perhaps 2 examples where it comes back to Mike's point. Consumer sector is something that perhaps we've been underweight in the past, into the recent past, but we're seeing really interesting opportunities.
And by the way, very good timing. Because I mentioned that last year, you know, consumer sentiment was sort of improving all year long as the year progressed. At the end of the year, boom, it really started picking up, November and December. And actually for Mobile World in particular, their stats for November and December, like even just the average basket size, just I talked to one of the guys on the board, just boom, popped like crazy the last few months. So very good timing.
And I would suggest as we think about 2025, we talk about a recovery in real estate. I think real estate is certainly kind of an extension of the consumer sector. So as you think about, you know, how the portfolio is positioned. So Mike,
sorry, to be clear, when the real estate sector is doing well, then that makes people want to spend more money on it.
So one question that we'll always get, and I'm late in saying this, but if you do have a question, please type it into the chat function. I've got the iPad here, so I'll see the questions for the live Q&A. So last year, the currency depreciated around 5%.
Right.
What's your view for 2025, and maybe think about it, kind of view first quarter versus the rest of the year?
Right. Okay, so there's a bunch of things here that there's going to be a kind of confluence in the beginning of the year, Q1. I mentioned in my opening remarks, though, I'm expecting the slowdown of GDP growth. Why? Because of the slowdown in export growth to the U.S. Well, that will also weigh on the currency. And we have some other things that are going to weigh on the currency, you know, with the Trump's inauguration, et cetera. Although the news, you know, yesterday and today is probably things with tariffs are not going to be as severe for the currency. And you saw the dollar come back down after that. But that having been said, I do think that Q1, there will be some further depreciation pressure on the dong. So you'll have an interesting confluence of slower GDP growth and some depreciation pressure on the dong, offering, you know, good investment opportunities, probably in the stock market. If the stock market does go down because of those 2 factors, please don't sell, because that's an exact buying opportunity. Probably be more good negotiating opportunities with sponsors on private equity, you know, type deals. But the key point is that by the end of the year, both the economy and the dong should be doing better. The economy, because the government is going to stimulate more infrastructure spending, we see already the approval process process for real estate's picking up, et cetera, et cetera. And the dong I expect to do better by the end of the year, partly because you'll see some depreciation, some appreciation pressure on the dollar ease as people start to understand.
Can we put you on the spot a bit?
Yeah.
Where do you think the currency will be at the end of the year?
I would have said that we would have 5% depreciation in Q1, but actually now with these new Trump developments, we might not get quite to 5%, but we'll probably depreciate by about 3% by the end of the year. That's
so it could be 4 in Q1, but you think it'll actually end up at negative at 3% depreciation?
Yeah, 2 to 3, you know.
Which is back to sort of the averages in the past.
Yeah, in the past, Vietnam's currency never depreciated by more than 3.5%. Remember, there was this big blowout in China in 2015. After that, except for last year, which was an anomaly, the currency never depreciated by more than 3.5% a year.
So KV, getting back to the portfolio side of it, one of the things you talked about in your opening comments was the discount widened. And so as you think about it, I think it's now at about 22, 23%. We've looked in our research at the UK trust market, not just the peers, but the overall trust market in the UK, and discounts have widened. Part of more of a vehicle, for lack of a better term, situation as opposed to a Vietnam situation. Having said that, what are you doing as a portfolio manager to help narrow the discount for shareholders?
Absolutely. You know, one of the things that, if we were to look at our report card for 2024, that widening of the discount has not been an area that we're particularly happy with. That being said, I think a couple of important points. The discount management, the discount program, and what we do specifically around the share buybacks is part of an overall return of capital to our investors. So what happens is that when we see volatility in the share price, when the discount widens, the share price widens to the NAV, you'll find a lot more activity coming in terms of buybacks. Last year, we spent almost $80 million in buying back shares from the market. That represents almost 8% of the shares in issue, which is a lot more than we do on average. On average, if you look at since 2011, when we started the buyback program, we spend on average 40 to 50 million. So last year, in response to the dynamics of what's happening in the industry and the market, we spent a little bit more. Now that stabilized the share price. At the same time, we continue that return of capital to shareholders in the form of dividends. We remain the only Vietnam-focused fund that keeps a dividend, and we pay our dividend, and we pay it twice a year. It represents 2% of NAV. Last year, we gave back $21 million in dividends, about 14.5 US cents to shareholders. And I want to explain, this is not just a 1 year outlook. If you think about that return of capital that we've committed to our shareholders over the years, since 2011 to present, we've spent over $550 million in share buybacks. I remember that when we started the share buyback, the fund size was only 700 million. Right? So you can think about how much gains and profits that we've generated from this fund to meet that buyback. The other thing is that we've spent over $170 million in dividends since 2017. Combine those two, over $700 million given back to shareholders over the last, say, 13, 14 years.
Well, why don't we pause there? I see some questions already coming in, so I appreciate those. And so now we'll go to the kind of the live Q&A, so where things are coming in, and here we go.
Thanks, Eric. Yeah, we've got a number of questions here. We'll turn back over to you now in Saigon, and I'll allow you to pick up the Q&A going forward. Thank you.
Awesome. Well, thank you, David. And this is, I guess, as seamless as it can be between dueling moderators. So thank you. And there are a bunch of questions that have come in, so I'm going to put my glasses on so I can read them. Okay, first one, and we didn't talk about this, so this is good. About the potential EM upgrade, so we'll go to KV. There's been significant talk of a FTSE EM upgrade in 2025. What are your thoughts on this, and how does it impact the way the team is positioning the portfolio?
So the first thing is, Vietnam going from frontier to emerging market is going to be a great thing. We don't have the crystal ball, so whether it's in 2025 or 2026, we're not going to sit here and guess that. what's important is that we've seen many things begin to come in place to see that ascension take place. They say, you know, rising tides lift all ships, and we're going to see that that's going to benefit the market in general, and specifically within our portfolio, there are going to be names in there with the public equities portfolio that we have that will benefit from that. But we're not changing our portfolio to adjust to this ascension. We're just looking for good companies and good opportunities, remain looking in the market.
All right, thank you. All right, and another question came in specifically about private equity. I'll go this one to Alex. Can you provide an example how you and your team are working with the management team specifically of some of the private equity holdings to drive shareholder value?
Yeah. So that is related to the principles of private equity, and we've talked to the strategy of VOF and the aim of the manager to get involved in companies where we can add some value and help. And the team has been doing that for a long time, and there's many examples of that in our history. But more recently, and KV was talking a little bit earlier about one or two of the problem companies that we have in the portfolio, and I think within there's a very good example of how we have taken members of our staff, put them into the company to start to try and address some of the problems that the existing to help the existing management team with the issues of facing. And maybe KV, hand over to you.
Yeah, I think what we're referring to is the in-holdings investment,
yes,
which is the convention business, so top quartile in the market. About 18 months ago, they took on an F&B business. And you know, it's taken a long time to turn that around. About 4 or 5 months ago, one of our team members, Tao Mai, she stepped in to act as the interim CEO, and she's doing a great job, you know, helping the business with the founders, with the operations and management team to turn this around. For example, you know, December, just gone past, best month in terms of profitability for the business. We've also looking to bring in professional managers,
yes,
as an external CEO to come into this business and help turn that around. So that's an example where, you know, we're putting, you know, our own, you know, people into the business to help turn around, but recognizing that we should bring in professionals externally.
All right.
Yeah.
Cool. Thank you. Another question just came in here. Probably for you, KV. In your opinion, to what extent do we expect Vietnam to capture current developments in technology, i.e. NVIDIA, which is actually partnering with FPT in 2025? How does VOF benefit, if at all, and are you planning to increase the position size in tech?
So let me hand this to Mike to start from a top-down view, and then I'll talk to you about the VOF portfolio.
Yeah.
Mike?
So we have this huge and great tech company here. The FPT is kind of the main one, and there's a few other ones as well. They've got a fabulous outsourcing business, and they're getting deeper into, they have a really good connection with NVIDIA. They have NVIDIA calls it the AI factory. So you'll see more development of things like chatbots and agents going on here. And the other thing that they do, which is not immediately, it's kind of adjacent, it's semiconductor and AI adjacent, is they do a lot of the IoT work. You know, so they do programming for automobiles, for TVs, stuff like that. And that's all has a very promising future, you know, with every way everything's going with AI and semiconductors. And I think it's been a big holding for you guys for a long time, right?
So if you look at the index, the Vietnam index, technology weight there is about less than 5%. Yeah. If you look at the VOF portfolio, the allocation technology is almost 13%, and that is in the company FPT. To Mike's point, you know, there are few opportunities beyond FPT on the public markets, but on the private markets, you know, we're looking at and seeing plenty of opportunities. And while we don't have a technology focus and bent on this portfolio, what we're seeing is many of the companies that we're investing in or have already invested in is using technology to enable them to improve business. And that's really how we view technology in this space.
Yeah, I think if you look at the consumer sector, almost every leading consumer firm has a technology component to it, and that's the way they're winning. And frankly, all of the banks that are part of the portfolios, they've been focusing on digital transformation. Kind of, it's one of the, we'll all look at COVID as a negative thing, but one of the things that COVID really did was accelerate a lot of the technology investments in digital transformation, particularly in the banking sector. All right, question for you, Michael. Back to whole Trump and U.S. If the U.S. does put tariffs on Vietnam, what would the impact be in the economy? Will this change Vietnam's competitiveness? And could Vietnam be singled out due to its high and very visible trade surplus with the U.S.?
Yeah, great question. So Vietnam does have the third largest trade surplus with the U.S., around $113 billion last year. They do need to address that numerical surplus. We did some work, and we put the details in one of our recent reports. We think they can probably shrink the trade deficit or the trade surplus with the U.S. from Vietnam's point of view, probably around $30 or $40 billion. They could lop off of that pretty quickly by buying LNG. Normally, it's a whole long story, but normally when you buy LNG, you have to have all the facilities, but you can do it by ships, have the liquid come and regasify it, et cetera. So we think that's a way that they can quickly address the trade surplus, plus buying more aircraft engine, et cetera. But to your point, if there are tariffs, if there's blanket tariffs, and I think it's likely that he has to do something. So maybe we'll end up with something like 6 or 7% type, blanket tariffs on all countries. Vietnam, the wages here are about half, maybe even as much as 1/3, 2/3 below those in China, and half compared to Thailand, et cetera, et cetera. So you imagine that they go ahead and put blanket tariffs on all of our peers. Well, on a relative basis, we just kind of end up in the same place. So it really wouldn't stop factories from relocating here. Yeah.
No, and I think it is interesting. I think every day there's new articles that talk about what the plan may or may not be. And there was one article today that interesting, from an investment firm that just talked about how Vietnam should benefit, and the trade in Vietnam is really a credit to Vietnam from the FDI perspective. It's not just replacing China, but there's been a lot of things that have just come here as a standalone. And so I think as more people look to where the FDI is coming from, I think Vietnam is probably in a better place once people do look under the hood. All right, a question about risk. So this can go to anybody. How do we think about managing risks in the portfolio now? When Andy was here, Andy would always talk about, I have 3 risks that I think about. Alex, as the CIO, do you think about, are there 3 risks? Are there multiple risks? Is it VOF risk? So your role is across the organization. How do you think about risk?
Well, I think there's fundamental risk and then there's short-term risk. And I know Andy pretty well, so I'm pretty aware of what some of the risks he may have been talking to. But the 3 fundamental risks that I keep in mind when I'm sitting on the IC for VOF is very much around entry valuation, management. So can we buy into a company at a good price? Have we got management we can work with? And liquidity. The country is, and the liquidity is improving, but there is a big illiquidity risk, and how do we structure liquidity into the portfolios? Shorter term and more immediately, I look at Mike and the robustness of the consumer story and the real estate turnaround. And if there's anything that's worrying me at the moment is, what is the progress on that? Mike talks to, there's green shoots and it's coming, but from our perspective, and maybe KV pick it up from here, is how quickly is that going to come? Is it really going to come in the second half of this year? Or is this going to be...
And it's not actually showing up in the numbers yet. It's a lot of anecdotal evidence that we're watching.
Yeah, and I think, echo exactly the risks that Alex talks about, and how it relates to our portfolio, is that we have a concentrated portfolio, but in high quality companies, in companies where we have a material stake in these businesses, where we can go in and have good meetings with management, founders and sponsors, do our own due diligence. I think that's really much differentiates how we approach looking at companies investing.
So here's a question that just came in that I think is best served for Mike. So question is, what are the standalone factors of Vietnam, if not an alternative to China?
Well, that's a great question. And in fact, what I will say is that before all the trade war Trump stuff, the factories were already starting to move here. Because as I mentioned just a few minutes ago, the wages are anywhere between half and 2/3 below those in China, much lower than Thailand, all of our regional peers. And if you look at the quality of the workforce, there's a lot of surveys by Jetro and others that basically the quality of the workforce, however you can quantify that, is very comparable to China. So basically you're getting a very high skilled workforce at a discount wage, and the experience of the companies that have been here, pretty much they've all had very good experiences with how things have gone in terms of the production, the productivity of the workers, and this kind of stuff.
I'll say this, and this is a very, not a cavalier thing, but for you or anybody listening right now, I'd say come to Vietnam and visit, because
Yeah,
one of the things,
yeah.
we were working with a family office in Switzerland, and he became a client, and he reached out to us, and I said, well, why did you become a client? I'm happy. And he said, well, I was in Vietnam on vacation, and I told my friend, and my friend owns a factory there, they produce hearing aids. And you go someplace, and it's in the middle of nowhere, there's 1,000 scooters or motorcycles outside, and then you shut the door, and it's like vacuum sealed, and you could be in Switzerland, you could be in Germany, you could be anywhere in the world. And so what surprised him was the for cleanliness, modernity. Basically, the factories here are as good, as modern as anything else, and a lot of them are being built. And so they really are kind of skipping that generation of 30 years ago factories that were built in China or Japan or Korea. So for those of you that have the chance to Vietnam, please do, and certainly we can arrange visits to industrial parks. I think people will be amazed at how modern the technology is here. So that's a plug to come visit. Great food too, obviously. All right, another question that just came in. Let's see here. Yeah, so KB, this is for you, really. What excites you the most? Are there certain sectors or themes that you're really optimistic about? Is it existing holdings, or is it things that you're looking at? So, we kind of know what keeps Alex up at night, but what kind of gets your juices flowing?
Look, just to reiterate what you're saying, the opportunity set here in Vietnam is incredible. And if you think about what Mike said at the beginning, how we're going from perhaps last year export to now this year more domestic focus, that opportunity set opens up. Specifically around the consumer sector is very interesting. And one area that we should highlight in our portfolio is the healthcare space. Right? If you think about healthcare, if you go to the index, the weighting in the index of healthcare is less than 1%. Yet if you look at our portfolio, today we have about 8% weighting in that sector. It's a way for us to play the consumer sector, right? Rising incomes, demand for better services. Consumers here are demanding better healthcare. And that's how we think about the space. The healthcare space is another way to access consumers. So there's a really interesting exercise. If you think about what's in the portfolio today, consumer is about 16%. If you add the healthcare, we're almost at 25% allocation. In fact, it's the largest allocation to our portfolio. It comes back to the point Mike made earlier. We've been positioning ourselves well in advance for this recovery. So that's the area we've been focusing on. And of course, within the portfolio itself, great companies, high quality, continue to work with them to grow.
Can I start a little bit to that?
Sure. If I said no, would you do it anyway?
Yes. Okay. But your question was around what are we seeing in the pipeline and what are we seeing in the portfolio? And I think I talked about this earlier about the team and its depth of experience. And if you think about healthcare, we have a team that's dedicated to healthcare, led by one of our colleagues, Hung.
Yep.
And she's done a great job building platforms, and we want to continue doing that. So I think there are opportunities within our existing platforms to build those out, deploy more capital, bring partners in and take those forward, using the skills and strengths that we have. So I'm quite excited by the opportunities we're seeing in the existing portfolio.
Yeah. Thank you, Alex. And one of the things that I think we've shared before in previous conversations is the index is not a great representation of the economy in Vietnam. And so whether it is just a regular traditional listed equity fund or its Vietnam Opportunity Fund, here you have the opportunity to invest in private equities to actually better capture what's driving the growth in Vietnam. And so I think that's a huge advantage for this particular portfolio as you're thinking about how do you get access to the best companies in Vietnam, how do you get access to what's really driving the economy, and oftentimes it's not necessarily captured in the index. All right, so we've gotten to most of the questions. I think we were at about our allotted time. But before I go, I'll just ask kind of closing comments. So Michael, anything that you want people to take away until the next webinar in a couple of months?
I think by the end of this year, 2025, things for both the consumers and real estate are going to be much more vigorous than most people expect.
In Vietnam, everywhere?
In Vietnam, yeah.
Okay.
Yeah.
It's in our name, the Vineyard Capital Vietnam Opportunity Fund. That word opportunity allows us to invest in both public companies as well as private companies. And that's really what we're focusing our efforts this year, is to look at that pipeline to invest into these new opportunities.
All right, Alex?
And my closing comment is to build on that slightly, which is around VOF sits on the Vina Capital platform. The Vina Capital platform is extraordinarily active across the economy, and we're starting to generate what I think is an attractive pipeline of opportunities for the fund.
All right, well, terrific. Well, David and team, thank you so much for organizing this. And if we didn't get your question, please let us know. But we're looking forward to hosting another webinar with you again at the end of the first quarter. Thank you so much.